All right. Good morning, everybody, and welcome to Engineering the Markets. My name is Jared, and it is January 19th, 2022. Let's go ahead and dive into what the market has in store for us today. All right. So, if you recall from yesterday, we, as always, on our weekly start to any trading session, we go ahead and mark the expected move for the SPX index. And the reason for that is we want to see what the market implied volatility looks like for the week ahead, along with understanding if the market is testing, breaching, or even gapping between or below these types of levels, above or below. And oftentimes what you will see is that in the midst of larger market selling or buying, if you start to test these levels, you will get a bit of a market stall during those moments. And then the next move is often the one that will dictate the type of strategy to kind of play inside of that intraday session. So yesterday, we marked that the S&P had about an $86 expected move, or 86-point expected move. And that is based on the close from Friday. And we also mentioned the fact that it is a shorter trading week. It's only a 4-day trading week. And we're seeing a higher expected move pricing for the week. Now, on yesterday's session, it certainly felt as if the market was driving towards this expected move low as we saw a bit of correlated selling inside of the market. And we'll get to that in just a moment. Market overall was fairly weak across the board. Couple standouts here and there in the energy sector, which continues to be our lead bull sector overall. And of course, with financial earnings coming out, along with stepping into the earnings season proper, we're starting to see some push and pull inside of different areas of the market as financials have been somewhat hit on yesterday's session with the likes of Goldman Sachs and additional selling across previously reported banks. So all in all, what this did was it led the market down to the lower bound of the expected move. And I want to comment here on just how important that type of movement is, especially when it's occurring at the beginning of the week. The market drove towards this price level on yesterday's session. And here I just have a 1-minute time frame capturing yesterday's session. And I wanted to show the type of balance or basically stall that the market tends to have whenever you achieve this level. Typically, this is where risk in the market starts to perpetuate if we get outside of these ranges. And I'm not talking about 5 or 15-minute candles. I'm talking about a 1 to 1.5 time extension outside of the normal expected move on the week. You can see that the market really didn't like the idea of pushing much lower on yesterday's session. And if you zoom in, you can actually see that we not only closed near this price, but the market actually placed its settlement pricing around this particular lower bound. So what this is showing is that the efficiency of the expected move is quite high this week. We've seen this lower bound test. The market responded with the fact that it was less probabilistic to go much lower than this expected move. And yet, as we mentioned, this is our weekly expected move. So it's worth noting that on yesterday's session, as we drove into this price level, we're still looking about a $75 expected move for the rest of the week. Basically, from yesterday's close, we're still anticipating about $75 of movement. And of course, the directionality of that movement is going to be based upon what type of selling we continue to see, or is the selling starting to come to a head? And are we more likely to respond back into the mid or upper bounds of our expected move on the week? And this, once again, is the more probabilistic scenario. Option market uses this expected move as sort of a standard deviation range. And when you're talking about that one standard deviation, this is more or less the 68.3% probabilistic idea of the market closing inside the expected move week in and week out. So shifting into some of that correlated selling. And really, no matter which heat map I pull up, you're going to see a lot of that overall bearish tone on yesterday's session. Interesting enough, the S&Ps had some of the worst market internals on yesterday's session, with some of the internal readings almost 20-1, with capital flow leaving declining stocks, essentially the selling pressure in those stocks that were making new lows compared to Friday's close, along with the fact that that pressure continued throughout most of the session. The Nasdaq actually was a bit less bearish. You might not sense it or feel it in regards to the price action, but there were moments in time where the capital flow was not quite that high, especially in our declining stocks. We actually had moments in time where we were seeing potential reversal signals. Capital flow was going back into those declining stocks, but it was going in a more bullish fashion, basically buying instead of selling. But to really hit the point home, we did see a lot of overall selling inside of the Russell. Now, this is an index that has been struggling to catch a bid and basically is testing its range lows as we speak. Market sort of correlation that we're seeing, where the market is selling across the board, it's not really concentrated in one particular area. This is indicative that the type of hedging activity, along with potentially a bit of an outflow of the market equities themselves, is taking place. And what's great about this for the bull case is that if this does revert, if we do see sort of a flip of the script, that high correlation coefficient can actually lead to some of our most bullish intraday sessions overall. So while yesterday felt like the beginning of more selling in this market, do not count out the idea that if we see the script get changed, correlated buying can be just as powerful. The idea here being we are positioned in an interesting location for that potential bounce to occur. And that can easily be highlighted in regards to our S&Ps, of which I'll add the 100-day moving average to showcase where we are located in this market. Now, all that said, obviously we are looking at a corrective phase in the market. When it comes to trending structure, it's notable here that we do have a daily downtrend that has formed. It is confirmed. And what that looks like is simply marking off those relevant swing highs and swing lows that form trends, along with the fact that this doesn't necessarily mean we're going to continue in our downtrend, but it is the start of something a bit new. So here, of course, is our high, and you want to mark this as sort of your higher high. We came down, and this is your low, your higher low. Now we have a lower high marked off by the bounce, and then yesterday's session coming into our higher low and changing the trend structure for our lower low to be formed. So in the context of our daily, we do have a daily downtrend that is confirmed. And of course, as we zoom out, we can see that this is simply a pullback in the larger weekly uptrend that we have been in for quite a while. But as with everything, it's worth noting if this trend does continue, if we see more downside pressure if the market hasn't quite yet bottomed out of this corrective phase, then I'd be watching this approximate 450 zone in the S&Ps. The reason being is it coincides well with our previous swing low. We have our 100 period moving average. If that does break, I do expect sort of a flush of potential buyers who are using this as a support area for the market. And then additionally, this is our lowest sort of close and print level in regards to our most recent range definition. This is sort of where all of this selling pressure began. And we certainly saw that as the market bid into November and December. And then, of course, our false breakout look and our first swing low, setting up this range that has been very relevant for intraday trading and for swing-based scenarios over the past couple of months. So all in all, while we are at a support zone, and while, excuse me, while this market can certainly recover from this area, we need to see that correlated coefficient either cease, and what that would look like is a bunch of sectors performing independent of the market itself, or if all you care about is the sort of dead cat bounce scenario, then what you want to see is correlated buying. And what that looks like is not necessarily a heat map view. That's sort of in the past. It's a bit of a snapshot. What you want to be watching is something like an index watch. The idea here being whenever you filter upon a list, in this case, if you were watching, let's say, the S&P 100, something like this will showcase whether or not your stocks on the intraday session not only have gapped up or down, that's of course just advancing or declining, but whether there's volume and capital flow going into those particular stocks. For days where the stock market looks like it's going to bounce, let's say a gap up open, one of the things that can signal a possible reversal is the idea that we might have stocks that are in the advancing category, but more of the capital flow is hitting either declining stocks or there isn't enough capital going into those advancing stocks. And that can lead to those type of turnaround days where the market looks like it's trying to push forward. We start to basically lose our morning auction low. And then of course the market sells off for the rest of the day. And that is exactly what occurred on this particular day, the 13th of last week. We actually saw the market internals sort of not necessarily flip, but there was a bit of divergence with the morning open in regards to continuation and the fact that there was too much capital pressure inside of declining stocks, along with not enough capital flow into our advancing stocks, leading to that turnaround day where simply the bulls were overwhelmed by the bears. So as always, keep the Nasdaq on watch. We are seeing the first signs of our trend line starting to be breached. This is a trend line, once again, that has been intact for multiple months and has essentially been created since the beginning of our post-election phase in this market, ever since the end of 2020. So very important trend line for the Nasdaq. First signs of an early breach, and of course that daily downtrend look at this point in time with our highs. This of course was not even a higher high because we didn't necessarily make new all-time highs. So let's just say that this is a high. We swung down into our low. This is our, actually this is a lower low. So the weakness here is actually more significant. This is a lower high. And then, of course, we didn't quite breach our low, but this weakness is more evident in the selling pressure and the willingness to break a previous swing low. Okay, so Nasdaq, IWM, We've talked about how critical this lower support tends to be for this trading range. This is our lowest print since this range formed. And understand that this is where the market lost its daily uptrend structure. Basically, it did not make new relative highs from this area without significant downside pressure, and our trading range formed from this area. As we zoom out, we can see that if we start to lose this support, essentially if the turnover is occurring based on moving averages starting to cross and the overall weakness that we've seen in the IWM, start to mark where lower support zones are. Essentially, this is a market that you have to prepare for a potential breach. And if we do see it, starting to look for things like possible capitulation, as larger selling will lead to significant buying pressure, basically as people begin to stop out of the trading range trades, along with if we lose our trading range, just sort of anticipating what that downside could be. As we saw, this false breakout here actually gives us a bit of a clue. If we look at maybe the extension of this area, basically just drawing a simple percentage gain from the top of the range to the all-time high, and let's assume that we do breach the low here, the potential downside, even if it is a false breakdown, could look exactly like what we saw here. Basically, the market selling into a lower support zone. I've even marked this one, which is a bit close to our trading range, may offer a bit of a stall, but ultimately a breakdown should have a bit more momentum, depending on how it forms. So these are all scenarios to prepare for and ultimately to trade. Obviously, what we're seeing in this market is bounces so far have been sold into. They are getting us back down to, at the very least, the swing low targets, which means if we do not see recovery in something like our critical supports being held, we may once again see a bit of a lower low, a lower high scenario, at which point we'll interpret whether that becomes another sort of sell-off event or even a shorting opportunity in the context of our larger weekly uptrends in this market. Okay. Switching back into what has been working so far. Let this load. We've seen energy strength. That's, of course, pretty much evident on everyone's watch list at this point. Once again, just a cautionary tale, crude did break out yesterday. We're a bit extended overall for just looking for potential upside. And what that can mean is while crude did have a fresh breakout, the follow through here might be a little lackluster at the beginning. We might see a secondary pullback into our support zones. And this, of course, would be something like the 20 starting to catch a bid once the pullback begins. And what this can do is just kind of stall out the energy sector for a bit. Obviously, one of our strongest sectors. So not necessarily looking for shorts at this moment, but understand that buys in this upper range are quite risky. We've already moved significantly off of the low. And as we pull things back, we're getting into resistance zones that haven't quite been tested yet. So the reaction from them, the type of significance they have to the market, has not really been fully discovered. So keep that in mind. This is a bull sector. A pullback buy would be appropriate once that pullback begins. But ultimately, this has not pulled back. We're just looking at something like pivot structure. We're looking at pretty much all green, some indecision marked off by the yellow. But anytime you see black, that indecision broke bullish. So this really hasn't pulled back on the daily time frame. We're looking at pretty much very muted intraday sort of chop and then continuation so far. So quite risky if it does decide to pull back to buy near these elevated points, but definitely one of our sectors to keep on watch. Move this back into this time frame. And then, of course, with earnings coming out, UNH is one of our main holdings inside of healthcare. If I shift back into fundamental view, we're looking at basically an equal weighting compared to Johnson & Johnson. This is actually a new development. I wasn't aware of this. UNH and Johnson & Johnson holding the same market cap. And that is quite interesting to see that that division there. But anyway, going back into the discussion. So UNH reporting, definitely want to keep a watch on healthcare today. This can be both a stock in play, as the earnings is pricing in about a $20 expected move. And if we look at UNH, looks like it had reported, but the conference call is coming up a little bit later. So financials, pulling off of our trend line resistance. This is sort of the completion of this low to high transition. We've seen this before in financials. This is sort of your buy signal. If you're aggressive, you're looking maybe to get position for continuation into resistance. And then ultimately the market can continue higher from here, but your risk to reward becomes limited in these upper zones. This has been established on previous swing highs and has basically timed the top of the financial sector pretty consistently for the past couple of months. So earnings, of course, are causing that shakeup. We saw Goldman Sachs as basically our sell-off from yesterday's earnings reaction. This is an interesting setup on the intraday session. We lost the 200, so definitely looking for this gap down to have some continuation. And on the 1 minute session, you can see there's a bit of a short signal here in regards to our 1 minute orb, this sell-off, stall, and then continuation. Also notable here that this level, which is our previous range low, very important swing lows for Goldman Sachs, actually held as support. So if you were looking to short this stock into support and then complement that with a recovery bounce on intraday or even potentially a swing setup, as we did close sort of mid-range, this is the level to sort of defend for this stock. The idea here would just be a sort of stall or a slight recovery bounce back into this open air gap that has formed. So Goldman Sachs, quite interesting, but we did see selling pressure across the financial sector, not just Goldman Sachs. JP Morgan had its earnings the day prior. That was a breakdown from the 200. That continuation led into yesterday's session. High selling volume, once again, coming into swing lows. And this one, I would say, is a bit at risk given where we closed below this swing low. I'd be looking a little bit further out in time to find more preliminary supports that held on previous swing highs. So financial sector is at a bit of a decision point. You can see that with the XLF being back at the 20. Obviously, financials are loving the rise in interest rates, but earnings are going to shake things up a bit. And from the perspective of the XLF, yesterday and the day prior was a bit of a warning that the upside might be a bit limited as we start to pull back into our mid-range area. This is often what most people would refer to as a reversion to the mean in regards to overextension and underextension. Usually linear regression channels are good for those setups. And let's see, last but not least, our tech sector, very similar to the Nasdaq, coming into potentially support. And this is kind of where I'm looking to maybe get a bit long some technology, because while the Nasdaq has its trend line, the tech sector does as well, and they are not necessarily lined up in the same location. Tech sector major components here being the likes of Apple and Microsoft, and Apple is actually holding up quite well amidst this market sell. So if the tech sector does correct a bit further and we see some sort of signal for potential buying, this might mark a moment in time where the market could actually recover a bit further than what we've seen. But as always, keep that downtrend mentality in mind. This is in the context of our larger uptrends with higher highs. This is actually a lower low, breach of our swing low, lower high, and then near confirmation with our potential double bottom. But I'll be looking for this to maybe break a bit lower back to our trend line support. All right, so stocks in play today. We do have some news out of SoFi. They are getting a bit of a pop in this pre-market session. I do have a couple of preliminary levels marked based on previous reactions in the past. It does look as if SoFi is reacting quite well to what I marked as a prior support. Now that's turning into a bit of a pre-market resistance as this particular stock is trying to potentially get into a bit of an hourly uptrend. That, of course, is going to change the perception of this longer term downtrend that has formed. We are looking at our potential breakout and, of course, the pullback being where the bulls need to prove the change in trend. So stock in play today, definitely SoFi. Just watch out for this pre-market high, which has already been marked on my chart. Let's see. Second stock in play. Give me a moment here. SML, no, that's not it. Oh, we'll talk about what occurred yesterday with the likes of Microsoft and Activision Blizzard. Basically, a agreement for Microsoft to purchase Activision Blizzard. It's a $68.7 billion all-cash deal, largest acquisition for Microsoft in history. That comes out to approximately $95 per share for Blizzard. However, this is not going to be completed immediately. This is going to take some time to close. And therefore, we did see a bit of an overreaction on yesterday's session and then a slow fade. A lot of people taking this short. And then a lot of our gaming stocks offering very similar setups intraday. The likes of Roblox, overreaction on sort of a sympathy play, and then a sell-off back to where we came from. Watch Ed's recap to show how to trade some sort of parabolic reversal in regards to these setups. And then our second stock in play, EA, which did have a similar setup, overreaction, and then, of course, a fade into the end of yesterday's session. All right, so new day, new opportunity. Look out for the correlated buying or selling in this market. Our correlated coefficient's really high, which simply means that when the market is being bought or being sold, it's usually not concentrated in one or two areas. It's across the board. So whenever that does occur, pay attention, look for changes in that sentiment. And if it is continuing, be very cautious of what that can do in regards to a trend intraday. That is often a very powerful move, usually to some sort of lower or upper bound, the expected move being sort of a key example from yesterday. So let's see if we can get a correlated buy today off of the 100. If not, expect the market to be a little choppy. And of course, look for that relative strength if we do have any sort of buying pressure. You want to be in sort of the best stocks in play, or potentially the market as a whole in the likes of a correlated buying event. So trade safe. We'll talk more tomorrow. And as always, stay tuned for pre-market prep to get more information. All right. See y'all then.
All right, there we go. Can you guys hear me now? Doing a quick volume check there. Okay, perfect. All right, guys. Good morning. Welcome to Pre-Market Prep. Hope you guys had an amazing day yesterday. Hope you guys are doing well today. So, all right, guys, let's get started. Let's look at some of the stuff we had on our list yesterday, starting with Baba, which actually did pretty good compared to many of the stocks that were trading rather horrible yesterday. Again, there was not a lot that looked great, at least for me. For me, there's a lot of stocks that were not looking decent at all. But here's Baba. Baba did have a nice little opening. Actually, let me put it in the right chart, the bottom one, which is the one that you guys see now. Here it is. So nice little 5 minute opening range. Not 5 minutes, sorry. The 5 minute chart shows you a nice little breakout here above the highs of the pre-market. And you can also see how great this continuation was. So Baba, not too bad yesterday. Did get a little toppy here after the first hour or so, went sideways, and then you had a nice little drop there. So out of many stocks, this one actually did pretty well. The other one that did very good yesterday for intraday trading, which is a good continuation, was JP Morgan, guys. I mean, look at this drop here. Right out of the gates, this thing just took off, and again, never really looked back. It only gave you one decent pullback, which was the first one here on the first 5 minute. Excuse me. And then from there, it just dropped, kept dropping there nicely, all the way from this thing opened up at 156, went down like about $5, right? 150, 50, 151. So beautiful drop on JP Morgan. Oxy also did not trade all that bad. You had an initial pop here, and then it just lost a lot of ground, lost the VWAP, and then beautiful continuation. Outside of this, guys, I mean, it was not a great trading day. You had Lucid here, which was very choppy at the market open. Microsoft here was also chopping around all over the place. Apple here, again, up and down action. They get better later in the day. You see this beautiful continuation there. And that's pretty much what we had here. We were all looking at ATTVI, which actually turned out as ATVI, which actually turned out to be a pretty good short if you caught it early on. So right here, you all know the news on this, how this popped up and actually became a nice little short opportunity if you were able to trade this and get into a position very, very quickly on it. So that is what we had yesterday. Again, not the easiest trading day. We'll see what we can pull off today of our gappers list, starting with what's gapping up. We got quite a bit of stuff there. So we'll see what's happening in that area. And then not so much in the rest. So are we looking for a bounce back day today? We'll have to see. We'll do the SPY news in just a sec. Norm will be joining us a little bit later. In the meantime, let's start with our gappers list and start checking out what's looking good for today for possible stocks in play. I'm going to remove our list here and let's take a look at the first one, the ZGNX this morning. Let's roll over here to the right. And what do we have? All right, so we have a pop 66%. What's the float on this? This float is 55 million. So we got a nice little pop this morning with some volume here, 4.4. Let's take a look at the daily. What do we have? All right, so typically the stock does not do anything. What's the news, guys? Anything going on here? What's the news on this? So I'm not a big fan of their daily and what they normally do. They don't look like they trade very well. ZGNX, but you know what? We'll put that on here. Acquisition. Okay, yeah, that's not great. That's not a great catalyst usually. We'll come back to it. Put as a possible. Again, does not look great. Let's see if that's gonna do anything for us. All right, Vine, VINE this morning. This is a 635,000 flow, shares flow. So you could tell how low flow this thing is over here. So already this morning went from 680 over to 810. So definitely has a nice little range there. It is up 20% at the moment, 1.2 million shares traded. What I'm noticing on this too is that this is sitting on the New York Stock Exchange. And these type of stocks, I just do not like the way these stocks usually trade. Their price action is the first that looks a little bit funky. They'll get a lot of volume. But again, just not a big fan of this. This is recent IPO'd here back in last month, actually, the 14th. So that's the first trading day there. And again, it's just been pretty crappy since then. Little action here. Is this a SPAC maybe? No, I'm not sure if it's a SPAC because usually SPACs have like this really long situation here when it comes to the ticker. But it looks like something happened on the 11th. You're getting a little bit more action there. Again, not sure what this is going to look like today. I'm just curious to see what, if anything happens on this. I'm going to put it as a possible for now, but most likely I'm not going to be keeping that on my list. SoFi this morning, we have a good pre-market activity on SoFi today, guys. Look at this action, up 15%, 6.6 million shares traded, definitely in play. This morning we got some levels that actually might look pretty good here. We'll keep those 1445, 1491. We'll review those a little bit later. Definitely in play, guys. Great volume. Was up even all the way up to 1470, giving some back a little bit now. But definitely one in play this morning. Jared did talk about this one a little bit earlier today on SoFi. So we'll watch that one. FREY was deemed at a bank last night. Okay. Yeah, that's good news for them. FREY. No, nothing happening here, guys. No volume. It's popping up 11%, but not a whole lot going on. Skip on down to BKKT. BKKT also not looking good. How was the float on this? 40 million. You got this initial pop here. The daily looks horrible. It doesn't get much volume. Yeah, we're gonna find something better today, hopefully. UL this morning. This is one we looked at yesterday. I actually took it off my list. What did it do, man? Look at this sell-off. It's funny how these stocks sell off, right? It's just, look at this sell-off here. Today they're getting a little bit of a bounce. Again, they had some really bad news yesterday. Pre-market action looks a little choppy, although after 7:15, 7:30, it's starting to get a little bit better. It is on short selling restriction. We do have shares for short. It could be interesting a second day here. Let's see. Could be interesting. I didn't like the drop yesterday. It just dropped so much. I did not expect this to continue to sell off like it did here. As we have Peter jumping in there. I like how Peter jumped in. Did you just take your sweater off and just threw it? Was that what it was, Peter?
Yeah, sorry.
It felt like the coach just tell you, "Hey, you get in here." You just kind of just took your sweater off and like, "Oh, right."
Coming in off the bench. I'm ready.
Let's go, guys. Let's give a thumbs up for Peter for stepping in while
you seem lonely. What happened to Norm?
No, he's joining us a little bit later. He's taking care of some stuff this morning. I know, Wild One. We should have had like some music come on when he came on. All right. So UL, guys, huge drop yesterday. And just a continuation here on it today might be interesting. We'll have to see. With that, guys, it's a whole bunch of stuff on here. I'm not gonna go through everything for the sake of time. I want to get to some stuff that you have, some stuff that Peter might have come with as well. Peter, you got the music. So we'll see where we go here. YNDX, IonQ. Let's just see if there's anything that looks really good. Morgan Stanley. What's going on with Morgan Stanley? They seem to be they don't usually move like this. Earnings. Pre-market earnings today, the 19th. So pre-market earnings on Morgan Stanley. That could be interesting. They look pretty decent today. Bank of America is doing earnings as well. Yes, they are. And yeah, we'll put Bank of America here also. How about any of the other banking companies? West Fargo. West Fargo's not so much. No, not so much. They had theirs already. JP Morgan yesterday, guys, was really, really nice. I think it's worth watching it again today as a possible. If we can find something better, JP Morgan will be decent to keep on deck and just kind of see what happens there. All right, let's see what's gapping down, guys. We'll stop here. I'm sure more are going to populate as we continue here. Neuro this morning, 6.6 million shares flow. They are down 6.6 million. And they're also down 6.6. All right, I almost got like thrown off there. And 123,000. Not great volume for the float that this is, 6.6. You need a lot more volume for us to be interested in this one. Heading down to USB. USB at the moment down 4.3, 141,000. I like the drop here, but for the most part, this stock does not seem like it gets much love here. So I'm not liking what I'm seeing as far as the pre-market action right now. I like this drop here. I like that we got some potential to even go lower. We got a nice little gap here. Maybe we can test, but just the pre-market action right now is not where I would like it to be. Here's open at the moment down 2.9 at 248. I mean, the daily looks rather interesting here on open, and possibly trying to get another leg lower than this level that it has here. This is one you might have to just wait for the market open to see how it's going to trade, because it's not giving you a whole lot to go off at the moment. Here's Cisco. Now, Cisco, do we have earnings on Cisco? No, that earnings was is on February 16th. So no earnings, but they're down today. So that's a big drop for them. They normally don't move at all. So why are they dropping today? Let's take a look at let's take a look here. Cisco, do we have any news on them? Oh, hold on a second. I did have something here. Let me see.
I always have to look up which Cisco we're talking about because there's the food services company, which is not these guys.
Yeah, yeah.
Cisco.
I
don't really see any news. I got nothing.
All right, they're not on my cheat sheet that my friend sends me every morning here. So
they had a downgrade from Goldman Sachs, but other than that, I don't see any other news.
Downgrade. Okay, I see it downgraded here from Goldman Sachs. Okay, all right. Possible guys, because we'll see what that really does anything. But I like their drop today. That could be decent. All right, guys, that covers our gappers list. Peter, anything you like this morning so far?
I haven't really looked, so no.
All right. Let's take it to the room, guys. Let's see what's going on there. And we will hop in here. Let's see. Let me get my text over here. All right, guys. What do you guys like this morning? UL. Yes, I do have UL on as a possible here. I think could be. I mean, I did not expect this drop on UL yesterday after dropping so much. This was great. That's why I took it off my list. I didn't expect that to happen. But today, yeah, possible continuation here. Not continuation, actually. It's looking more on the upside. So possible stock in play to kind of close this gap a little bit here. So yeah, I think UL is good. I have it as a possible there. NEO. What's going on with NEO? We haven't looked at NEO in some time. Right now, 230. I think the volume is a little bit light on NEO. So we might need to wait for the market open on this one. Again, just a little bit light there. They're up 1.7. If they don't have any news, even Tesla's a little quiet now, right? It's like we had all this action on Tesla in the pre-market in the past, a little bit quiet this morning as well. UL is good. We have that one. DWAC. Let's see. DWAC's price action can be funky at times, but today they're doing very well this pre-market. 866,000. Had a big day yesterday from 70 to that 85 there. Let's see how that traded. Look at the pre-market action on DWAC. Does nothing. And then it gets going. 23 million shares traded. So not bad, not great, but definitely got going pretty nice here. Compared to the stuff we had on yesterday's list, this actually did pretty good. So possible continuation on this one?
Yeah, it's been moving, but like watching it during the day, you always have to be careful on this one because the gap, the spread can get pretty high, and then it gets jumpy. So it looks good afterwards, but trying to trade it real time is, I find it a nail biter.
That has been my concern with stocks like this. That again, you go back and we know these stocks trade horrible. And you'll go back now, you say, oh, wow, man, I missed out. But if you were probably watching this, it probably looked like crap, right? As far as, like you said, the spread and everything else, the price action. So it can look good now, but it probably wasn't pretty at that time. So, yeah, I agree with you, man. The last couple of days, though, they've seen some increase in volume, right? So you see that here from the 6th. They've seen 14,000. Now, yesterday, they did up almost 24,000. So, let's see, maybe a good possible. We'll keep it on here because as you can see on my list, there's not a whole lot on the main list this morning that looks absolutely great. Bank of America, I do have JP Morgan here. Bank of America does look good. I think it is in play. Normally these stocks don't move a whole lot, but today they got 1.8 million shares traded. They're up 4%, so good stuff for the banks happening. They also had earnings pre-market today as well as other companies. So yeah, I think Bank of America is good. I like them. And I checked with Fargo, right? West Fargo didn't report. That's usually my favorite one. Let's see, West Fargo. No, they did already. No. So, okay. So Bank of America is the one for today. BKKT. We looked at this earlier and it wasn't great, guys. I don't like this initial pop here. And now we got this like kind of sell off. I'm not a big fan of that. So let's see. Also, it doesn't look like it's going to trade very well. But again, we'll have to see at the market open. I'm not liking the way it's forming right now in the pre-market. Now, if we find some base here, we start hitting these pre-market highs and we start to get going, maybe that could be get a little more interesting. But the way it's setting up right now, it just doesn't look all that exciting.
And as we know, it's all about the base.
I'm sorry?
Sorry, couldn't resist a dad joke.
Oh, I missed that. What was it?
I said, as you said, it's got to set a base, and as we know, it's all about the base.
Yes, it is. All right, guys. So over on YouTube, one more here. Sorry, not YouTube. In our chat, Apple. Let's take a look at Apple here. Apple this morning. Yeah, that looks good. Apple looks good. Again, let's see if it's gonna be this one of these bounce back day after having such a rough day yesterday. Maybe that's what we're getting into today. We'll have to see. Roku today. No, I don't think Roku's in play. Volume is not really there for Roku. So no, that's pretty quiet right now. All right, let's take a look over at our YouTube chat. Bank of America, we have DWAC, we do have Lucid. Let's take a look here. Lucid. You got 790,000 shares traded right now. I just don't see anything good on it. It's coming back down to the previous day close. It's essentially flat right now. Yeah, I don't know if this is really good today. Even for a bounce back play, there's better setups like Apple. How about AMD? Even AMD might be a better setup, but definitely Apple looks pretty nice this morning. That's what you're looking to do. Microsoft yesterday with all the news going on, it didn't do a whole lot, right? They popped up and popped right back down. So right today, I mean, yeah, we can see where it goes. Microsoft. We'll have to wait for the market open on that one. mRNA, what's happening there? mRNA reversal, you're calling the strategy already? I don't know. I don't know. Man, this is on a clear downtrend. So I don't know about a reversal at all on this, man. This looks really, really weak. That's just my personal opinion. I think you got to be very careful if you're looking for this thing to go up. Remember, these are the stocks that popped up when COVID was at its best, right? And things were going nuts. That's I don't want to say it's kind of on the way down, but it is. So I don't think you're going to get, anything crazy on this. So that's just my personal opinion on that thing. Be careful if you're looking to get a swing reversal on that. There might be better opportunities out there. So just keep your mind open to something else. MU this morning, no, pretty quiet. Nothing happening there. BA, Boeing today, no, pretty quiet as well. Not in play. Roblox might be a good one. How are these gaming stocks doing? Roblox this morning up 2%, 134,000. Again, they had good news. Well, not good news yet, but sympathy plays yesterday. They still ended red, and Roblox has been in a very, very nice downtrend. Yeah, I don't know if this is really in play. Might be a good one to wait if it hits the scanner. So, guys, not a great list this morning. We have SoFi looks good. We have DWAC, which normally we would never really watch on our list. We have Bank of America, looks very nice, and we have Apple. So that is all we have so far. So let's do this. Let's get to our community events and announcements. We'll come back and look at this list shortly. Remember, Peter, today we do have Creda. So
thank you.
I'm helping you. I'm helping you. So
I forget every time.
So you don't have to apologize.
Morning, thinking it was Thursday. So
no. I got your back, man. I'm helping you out.
I don't know what day it is. I didn't even know I was going to be here till, as you saw, I just got here. So, guys, it's a short week this week with the markets being closed on Monday. So here we are on the third day of the week already, but second trading day. Hopefully you had an opportunity to attend Thor's webinar last night. If not, it has been recorded and it will be posted to our website for all of our members that couldn't make it live. Next week, I have the opportunity to deliver our day-by-day plan to start your trading journey. So what I'll do is I'm going to take everybody through sort of a suggested approach you can take as you start trading. So it's good for anybody that's just getting into the markets, trying to figure out how you're going to manage that first year and a half of trading journey. Or if you're already through that process, might be a good checkpoint to see whether you sort of checked the things off the list. The one thing I always remind people at that webinar is it's always going to take longer than you think. So have a plan so that when things start to move a little in a different pace than you anticipated, you sort of know how to manage it. So that will be next Tuesday, the 25th at 8 p.m. It's Wednesday today, which is always Psychology Day, and that means our, what are we calling it? Wisdom Wednesdays? Anyways, our Wednesday night tonight is going to be with Mike. He's going to be here at 8 o'clock talking about how to build your trading confidence by setting up a routine. And Mike is just reminding me that that's actually at 8:30, so we had to push that back a little bit. So that'll start at 8:30 Eastern time or market time tonight. So thanks, Mike, for that. But that'll, as always, be in the webinar room. And then next week on the 26th, we will have Creda. Now, being that she's in Europe, that's going to be an earlier time. She'll be with us at 5 o'clock next Wednesday to talk about taking the pain out of trading. So that's part of a workshop series that she's doing. So it's good because you can sort of catch up with the people who've been part of the workshop, see how they're doing, and obviously gain benefit from her wisdom, which we will do in a couple of minutes. If you haven't already, I would suggest you check out our free stock trading simulator. It is truly free. There is no catch. There's no like, give us your credit card and we promise we won't charge you until we do. That's not it. It is totally free. There's no obligation. You don't even have to provide any information. If you want to get a daily sort of suggested list of stocks, a watch list that you can trade and test off of, then you can sign up and that'll be emailed to you. Eamon and Simon put a lot of work into sending that out and making it sort of a smart list. So that's great to take advantage of, or you can find that on our website. But just check out stocktradingsimulator.com. Again, it's totally free. It's really our intent to try and make sure that tools are available that we didn't find readily available in the marketplace to everybody who needs them. So it's a great way if you're getting started or if you just want to backtest your strategies, check it out. And if you wanted to consider joining us, we have two options for you. You can either join on an interim basis, just give it a try, see if it's the right community for you and helps encourage and improve your trading. If you wanted to join us on a test drive, use the code premarket24 to get a $24 rate for a 1-week test drive. That gives you access to the chat room all day, as well as our onboarding session. If you want everything, including all those webinars we were talking about and the psychology series, and of course, all the recorded information we have, of which there's hundreds and hundreds of hours in our library, then join us and you can use the code WINTER40 to get 40% off our annual elite membership. So that gives you everything. There is no other add-ons once you've joined at that level. So hopefully we'll see you here. If you haven't already, give us a thumbs up in YouTube. We greatly appreciate that. And if you're new in the room, why don't you say hi and let us know that you're here. So good morning to those that are new to the room. We love having you here and love hearing from the new people. And of course, those members that always end up saying hi and pretend that they're new. Now, somebody who's not new to the game, Creta, welcome. Carlos had to, of course, remind me that you would be here, so I didn't just talk over you once again. How are you doing?
No worries, Peter. I'm good, thanks. I'm good. How's your January going? Hope it's going well.
You know, it's going very snowily here. We've had a lot of snow. We had 50 centimeters on Monday, and we're expecting another 20 today. So we are covered in white.
Nice. I'm a little jealous. That's a world away from Lisbon. It's sunny at the moment. Not too bad.
You know, I don't be jealous of snow. Once you've shoveled it once, you'll never be jealous of snow again. So, anyways,
keep it for the ski holidays.
Exactly.
I'll let you know what we're talking about then. So I'm guessing that my message didn't get there. So we're actually talking today about something, it's going to sound like I'm contradicting myself, but I promise I'm not. So we're talking about when you're trading, why actually trips you up. And, you know, we spoke before about why it's so important to understand your trading, how you need to know what your motivation is for trading so that you can come back to that and refresh your mind anytime that you're going through a bad patch in your trading. And that all still stands, so I'm not disputing that. But this request came in from a veteran Bearable Trader member through Twitter, and they asked that I would actually cover this topic. And it was a great topic, so I do think it's relevant to a lot of people. So what happens when you're so invested in your trading why that it actually creates pressure on your trading? And this can happen especially if your trading why is linked to some kind of emotive reason. So for example, if you are trading so that you can make money to pay for medical expenses for a family member or something like that, or maybe to be a role model to your kids, and that's really, really important to you. So when there's a very strong emotional tie to your trading why, so the reason why you're trading, that can actually become something that trips you up in your trading. And the reason is because when you're so attached to an outcome like that and you make it everything, so in your mind, you know, you have to succeed and failure is not an option, that heaps the pressure on you. And as we know, when you heap pressure on yourself in anything related to trading, whether if it makes you look at the P&L more than you should be looking at it, so if you deviate from focusing on your process and you're actually pulled to the P&L, and in this case being pulled to watching the P&L because of the emotional reason that you have for trading, then your pressure heightens, and that causes all of these other things that we've talked about lots and lots of times to happen. So when the pressure is on, then your decision making becomes slower. When the pressure is on, you make more mistakes. You have a tendency to actually trigger all those subconscious limiting beliefs, all of that. So basically, we want to keep pressure at a minimum where possible, or we want to manage it. And when you've got a really emotional trading why, that can actually disrupt our efforts to keep the pressure at a low level. And so what can you actually do about that? Or, well, the first part of it is understanding why this is actually something that can trip you up. And when we think of attachment, so this is true not just in trading, but if we're attached as humans to anything, so whether it's relationships, whether it's money, success, whatever it is, once we put that thing on a pedestal and we become really attached to it, and we decide in our minds that this is the thing that will make us happy, or this is the solution that will make our lives better, or whatever meaning that we ascribe to it, once we've put it on a pedestal and we feel like we can't function properly without achieving it or without having it present, then we've actually given it too much power and we've lost ourselves in how we're looking at it. So when somebody, even if you have a very emotive reason for trading, when you're putting so much pressure on it, it makes you more likely, ironically, to actually not succeed. So the more you don't want to fail, the more you put yourself in a place where you might fail. So it's very important to understand that your attachment is something that's in your mind. So you can reframe how you think about this. And it's not to dispute that, like, let's say it is that you're trading to make money to pay for a loved one's medical expenses. Like, that's a very solid reason. And of course, if you trade well and if you make money, that's going to help alleviate that pressure and that problem. So we're not disputing that. But when you close your mind and you attach to trading as the thing that will provide that solution and the only thing, that's when you're in trouble. And when you close your mind like that and you put one thing on a pedestal, you've actually blocked out all these other solutions from happening. So if you stay in a space of being focused and determined and putting in the work and working towards a goal, so again, with this example of making money to pay for medical expenses, so you can work towards that goal, but it's important to stay relatively detached from the outcome of that. And what I mean is that, yes, pursue this goal, do everything that you can in order to make it happen, but also recognize that there's other ways that you can also achieve this. So it doesn't have to be just trading that provides this solution. Stay open to the idea that there are other routes and other solutions or other problem solving thinking that can actually help you to get to the same end result. So having the money to pay for your family members' medical expenses, but it doesn't all have to come from trading. And if you can stay in that space of having a goal, being focused and determined and motivated, putting in the work, but also realizing that there are other ways that you can achieve this too, and even nearly expecting or inviting those ideas to come to you, that will actually take the pressure off trading having to be the thing that makes everything better. And when you actually can operate from that space, ironically, you're going to be able to pull down the level of pressure that you're putting yourself under, and you're going to trade better. And just a second piece to this was a really good question because it made me actually think about the things that we work towards in trading. So say building confidence, knowing your trading why, all of those good things. It's not that they can become too much. So, somebody would say, oh, well, maybe I'm overconfident. It's not that actually you can have too much of these things. It's just when they're not balanced with other elements, then they become an issue. So in this case, we're saying, yes, have a goal, be focused, work hard towards your trading why, but remain detached and understand that there's other ways that you can also get there. And in the same way, when we think of confidence, if you're building confidence and you get to a really high level of confidence, that's great. It's not a bad thing. But you also need to balance that with realistic expectations and a realistic assessment of your performance. And that combination is going to be really helpful to your trading. Whereas if you build up your confidence and you don't actually keep a sense of reality and accountability and all these other good things, that's when it becomes a problem. So trading psychology is actually quite nuanced and you have to look for balance among all these variables. So I hope that helps in some way to the to answer the question that the person asked. But basically, just to boil it down, you don't want to become too attached to any one thing, and this goes for trading or any other part of your life. Try to remain in a space where you're putting in the effort, doing everything you can to achieve it, but that you understand that there's other ways that this can also happen, and look for those other ways. Open your mind to actually seeing those possibilities and those solutions, and that's when you'll actually be able to trade at your best.
Well, that's great advice, Kreda. One question I was seeing in the room that maybe you can help with, people are just trying to say, well, like what other avenues or ideas could they have to offload that pressure? I assume you're just meaning other activities in your life, but maybe you can.
Not necessarily. So that's a good question. So let me clarify, and I'll put this in a slightly more concrete context just to simplify it. So let's say if somebody sets up a business and they want to make the business, they want to be a millionaire, and they decide that they're going to make this business be the thing that gives them the millions. If they keep their focus narrow like that, like, yes, they can plow all their effort into the business, but they're not actually thinking that they can create passive income by investing. They can, there's other means to accumulate wealth. So it doesn't have to be the business that provides every single piece of their income. If they open their mind, they'll come up with other solutions that can help grow their wealth. They can become the millionaire, but it doesn't all have to come from the one channel. And so that's a really, I suppose, kind of basic example. But the idea is that there's always other ways to achieve a goal. When you make any one thing, whether it's, let me try and explain this better. So when you put anything on a pedestal in your life and you attach some meaning to it so that this is the solution. So this will make me happy. I will be a better person when I achieve this. I will feel better about myself when I achieve that. It's when you get into that space that you're in trouble. So one, you have to understand that you have to uncover the meaning that you're ascribing to something. So that's the first thing. Try and actually dig into your subconscious and ask yourself, what power am I giving this thing? So whether it is achieving the trading goals or having the relationship or whatever it is, what am I saying that when I achieve this, life will be better in what way? And then question whether that's true. And is there another way to actually supplement that? So if it's about happiness or something, yes, what other activities can I do to actually make myself happy as well? But if it's in terms of actual financial gains for an emotive outcome, open your mind to the possibility that it doesn't just have to come from trading. There can be other solutions. So it's probably a larger topic to dig into, and maybe we can talk about it on a webinar sometime, but I hope that gives people a sense of it. Basically, don't make any idols out of trading because it will actually keep the pressure on, and that's when it will decimate your performance.
Absolutely. Yeah. And thanks for that. The other thing I'll just mention quickly is in the chat, there was a whole big discussion over your accent. Apparently we sound so similar, they thought we were both Canadian. So welcome to Canada. Kreda is not Canadian. Just not that we wouldn't welcome her with open arms, but she's not.
Sometimes I get that I have an American accent, and someone thought I was Swedish before, so I don't know.
Swedish?
My accent's funny.
Well, that's what you get for traveling the world, I guess. It's it's more. Anyways, we love having you here. Thanks so much, Kreda. Appreciate it. And actually, did you want to take a second, because you've got some material that you were doing online? I noticed you're offering some courses and encouraging people to increase their knowledge.
Sure, yeah. So I have a course. It's the Go Deep to Level Up Your Trading course. It's an 8-week course, and it's actually starting on Monday. So if people, you can check out my website if you want to see more details. It's quite intensive. So I will say it's a good bit of work, but it is to build your mental edge in 8 weeks. And so it takes the themes that I'm talking about in Bear Bull Traders, but to a much deeper level. And also, if anyone is interested, I did do a webinar last night through my own channels on the 7 step blueprint to mastering your trading mental edge. And that actually, I have recorded that. So the recording is going to be available for 7 days, and I can just share the link. I might share the link with you, Peter, and if you want to put it in the appropriate place. So people can just click into that. It's unlisted on YouTube, and it will disappear in 7 days, but you can access that for free. So if anyone's interested, you can do that.
Yeah. Perfect. Yeah, send that to me. I'll make sure we get it into our alerts here for our members. So thanks so much, Creta. And
awesome. Thanks, Peter.
Next week.
Talk soon.
All right. Bye.
Guys, thank you so much, Creator. Guys, let's make sure we get that thumbs up over on YouTube. We appreciate it very, very much. And Peter will get that link and we'll share it with the chat and also with our YouTube members. All right, guys, let's get into it. I was looking at IIMX. This one was on our gappers list, making some noise here, but it's not looking pretty good. And I remember this thing actually popped up a couple of days ago and it wasn't so great. All right, let's see what we have, guys. I don't have a whole lot on my list, so let me take a look at what the moderators are looking at this morning. All right, I see Jarvis, SoFi, Bank of America, Morgan Stanley, mRNA, and then some secondaries, AMC, BTC, and some mining stocks there. So, well, BTC, Bitcoin. So, all right, so that's good. Again, just not seeing anything all that exciting today, but I'm sure we will find something that's going to be worth trading this morning. Here's SoFi, guys, looking good. We'll keep that on deck. We have DWAC, which normally we won't. This is more of a possible for me. And you know what? I am going to move it down because I know, as we were talking earlier, Peter, you know, this stock is one of these stocks that looks good after the fact, might not be good after the bell. So I'm moving that down. I have Bank of America. Looks good. We'll keep an eye on that one. Apple looks very good this morning. Good volume there as well. Let's see what we have here. Microsoft. I'm going to move Microsoft up because it's starting to look really nice, especially with this bounce we're getting here. So Microsoft is coming up. We'll remove that from our secondary list. Cisco this morning. You know, I love the drop on Cisco, and you know they don't usually get great volume in the pre-market. So, yeah, we'll ask Cisco up here today. Let's see.
I've been suckered by Cisco a lot, where they look great pre-market, and then they open, and I just can't find a good trade in them. So
yeah, absolutely. Peter, you're committed to get this link here, or you're gonna have some dislikes on YouTube. Guys, no worry, Daniel. He's gonna get the link before we end the show. We'll send it out. But if we don't give it to you tomorrow, today we'll give it to you tomorrow for sure. But we'll get that link going for you guys. All right, so Cisco looking good, actually. Let me see what else. Bank of America we do have in both places. Let's remove it from our secondary list. Morgan Stanley is another good one. I don't want to keep both Bank of America and Morgan Stanley on my main list, so I'm just going to keep Bank of America. You can watch either one. They're both very, very similar this morning, getting a nice little pop there with some decent volume. Unilever here, they are... it's good possible today. Let's see if they want to continue to close this gap here this morning. ZGNX, why did I put this on here? This one, yeah, they got great volume today. I'm just concerned that, I mean, look at this stock. It pretty much does nothing. This morning, they traded probably the same amount of volume they'll trade like in a week, right? They traded 8 million shares here. They normally trade about, what, 1.5, even lower, 900, 800,000. So today could be definitely a difference in the fact of the share volume they're getting. So it might be a good opportunities there. And I have JP Morgan, which also looks pretty decent. So, all right, that's my list, guys. Let's get to some levels here. Let's start with SoFi, which you already have a few on here that might work out very well. So 1534, good area here. You can see areas of resistance right over here and here as well. That looks nice. I put in 1491. We had this probably because we had a lot of touches, right? Not a main level like this one, guys. This 1534. I mean, every time we got there, we sold off, right? We couldn't break out of this in 1, 2, 3, 4, 5 days. Got a little bit going here and then slams back down again, right? So that's a nice level. You are going to have some play in there if this thing does decide to hit that. The 1491 is more of a minor level. Don't put too much weight on that. But this one here, 1445, tons of support happening there as well. So you want to have that on your list there. Towards the bottom, guys, we do have this level here, 1360, 68. We'll mark that there. And you can mark down, of course, the low of the pre-market over at 1393 this morning. So there you are. You're set with SoFi. Good pre-market activity, guys. And what we mean by that, since we have a little bit of time here, just look at the way this thing is trading. It almost looks like if the market is open, right? And that's what you want to see. You want to see that movement in price action, creating that range. That looks very nice there. High of the pre-market is actually all the way up here at a 1470. We can slam a level on there as well. So pretty much set on SoFi here, guys. Let's look at Bank of America. Bank of America, red day yesterday, a nice red day yesterday, as you can see here. Recovering this morning nicely. It is up 4.4. We'll do a level here at the high of the pre-market at 48.50. Above this area, we have right here 49.44, and then obviously a 50.07. So two pretty good levels towards the top there. You can also potentially look out for this. What is this here? This is going to be 48.70. You got a little bit of support there, but I think the main one's going to be this one, this 49.44 up there. Towards the bottom, guys, plenty of support, highs and lows from the last two trading days, so you're set there. Let's head on down over to Apple. Let's get rid of some of these levels that we have here, so we'll get rid of that. All right, guys, there it is. For those over on YouTube, there is Peter's link. Well, not Peter's link, but Peter sent the link for Creta. So there you go, 7-step for blueprint lessons, right? So take a look at that. Remember, it hops off in 7 days, Peter, she said, right?
That's right. Yeah.
So make sure you take a look at that, guys. Over on YouTube, help us get that 172, if we can, to 250, 300. We'll really appreciate it. I put it down at the bottom of there next to the left-hand side, left corner, bottom left, so you can see where we stand, so you can feel motivated to hopefully support us to get going there. So thank you for that. All right, so here's Apple. Apple is looking good, guys. Right now, stuck between highs and lows at the moment from the last two trading days, but you do have this main support happening here, which is your previous day close line, right? You see that right on there. You got a little bit of support, and a few times we have dropped lower and found our way back up. So right over here below that, you do have 167.51, and you also have this one, 168.09. We'll see what type of day it's going to be. Right now, we're slightly up this morning. We got a decent volume, 800,000 at the moment. Towards the top, guys, do not need to add anything. Highs and lows from the last two trading days. You're pretty much set there. Here is Microsoft. Microsoft getting a little bit of a bounce. They had some news yesterday that didn't really do much for them. I mean, they popped up and came back down. We'll see. We'll see what it does today, what kind of action we're going to get. 307 high of the pre-market on Microsoft. Above that, guys, the highs from the last two trading days sitting right here around 310, which makes perfect sense, because if you look at 310, you can see clearly where you have this area of support on a couple of days. 1, 2, 3. This one, see this right here, I will still include that support. I mean, we opened up, came back down, and managed to get above this, right? So that's interesting there. I definitely want to have that there as well. And then towards the bottom, we're set with the lows of the last two trading days, which is also the low of the pre-market and your previous day close. So a lot happening right there at around 302.05. If we were to somehow, change directions here and start heading into the red, I don't think that's the case, but this market is funny like that. 289, 298.14 will be a good one. And below that, just in case we take a dive, 293 will be a decent level to watch towards the downside. But we'll see. We'll see. CSCO this morning, we got a nice drop here. Normally, I wouldn't watch this one, but I like the drop we're getting here today. They got a downgrade, which is kind of hitting them pretty decent in the pre-market. 58 is the low of the pre-market right now. Trying to struggle to stay above that. Towards the bottom, guys, we do have a level here at 57.01, or it might be just 57 on the dot. And then that's pretty much it for Cisco. I'm not going to add too much on this. This is more of a possible, but I don't have a lot of great stocks to watch today. And I'm looking at the moderators list right now. They also don't have a huge list, right? Their list is very, very small. Like Dima only has 3. Peter has 4. Tiffany has 3 only. So it's a very tight list this morning. Let me resize this, bring this over so we can look at what they're looking at and go from there. And Peter, I haven't seen your list yet, but do you like anything that we might not have on our list?
Nothing that you haven't already mentioned, other than, of course, my old standby. I always watch AMD because it never seems to disappoint. There's always some sort of opportunity. The only one that we've been watching that I was going to put on my list here is JD. That's Brian always is keeping an eye on it. It's another one of those that lately seems to be like, doesn't matter what it does pre-market, it generally has some decent price action, or often there's something you can get out of it once the market opens.
Yep, agree 100%. And actually, I've been taking JD off my list and watching Baba, but JD has been trading well, guys. So yeah, I might add that as well to my list. Yes, they did did trade very decent. And Brian's all over JD. He really likes to trade that one. All right, let's start here with Jerry. Jerry, SoFi, Bank of America, Morgan Stanley, mRNA, secondary list AMC and Bitcoin. Dima is looking at SoFi, AMD, and Apple. Eamon, potential longs, Futu, PDD, and potential shorts, PLTR and NKLA. Peter, there's the link, guys, for Trader's 7-step to blueprint lesson. So definitely check that out. Do not forget it expires in about 7 days. Tiffany's list, Bank of America, Morgan Stanley, and SoFi. Peter, a couple of IPOs and SPACs there. And as you mentioned, you're watching, of course, AMD and JD's there in your secondary list. But you also have Bank of America, ZGNX, which I actually have as a possible swell. Crazy volume on that one. And it is up almost 70%. So that's looking interesting there. Secondary list for you, Apple, SoFi, Morgan Stanley, and JD, as I mentioned earlier. Simon, you're coming in with Apple. Got some key levels on there you can look at. Apple, Facebook, and Futu on Simon's list this morning. So, yeah, I think we are...
On that ZGNX, just note, it is a buyout, but it is shares and cash. So when you get the combined deals, it does give an opportunity potentially for it to move. But buyouts, like, you never know, right? The bell could ring and this thing will just go flat and be totally boring, or there might be some opportunity. As you said, with the big volume, I'm sort of thinking it might move, but who knows? It may come off the list quickly once that bell rings.
Yeah, that's what I have as a possible, because that's very well said. We'll have to see how it's going to play out in the morning. Puppet Master, longtime viewer over on YouTube. So there's nothing wrong with it. I'm just concerned that it might not be great. But I'm telling you, today, 1, 2, 3, 4, 5, we can add DWAC here, because I think it's just borderline. I think it's one of these stocks that normally doesn't trade very well, but today can actually do something, because their volume, guys, is pretty decent this morning. Pre-market action looks good. All right, here's Brian with his list as we switch off over to him. Apple, SoFi, DWAC, IBKR, and the scanners. And Mike is looking at Morgan Stanley, MS, and also DWAC as well. So that is their list this morning. Guys, thank you so much over on YouTube for joining us today. We will see you tomorrow at 8 a.m. with Engineering the Markets once again. Please hit that thumbs up. We're sitting at 213 likes. If we can get to 250, I appreciate it very much. And it helps out the channel a whole lot. So take care, guys. Stay safe. Peter and I are going to go in the chat and continue there. So have a good one, everyone.
Take care, everybody.